Forget 150K, forget 200K. You need to hear this urgent update from the biggest bull on Wall Street, Tom Lee. The Fundstrat co-founder didn't just raise his target, he dropped a bomb stating it's highly probable that Bitcoin will hit $250,000 next year. That's not a prediction, that's a mandate for portfolio action. But why 250K? What exactly is he seeing that the rest of the market is completely missing? Today, we are breaking down the 3 massive catalysts Tom Lee is betting on, the exact timeline he sees this happening, and the single biggest mistake retail investors are making right now. If Tom Lee is right, this video is your final blueprint. Let's get into it. Now let's get down to the brass tacks. Why is Tom Lee, arguably the most respected bull in the game, so confident about a $250,000 Bitcoin? It's not just a hunch, it's backed by 3 powerful, interconnected market forces he calls the holy trinity of Bitcoin adoption. First, the supply shock, the halving math. This is foundational. Historically, every Bitcoin halving has preceded a parabolic price run. Tom Lee argues that this cycle's supply reduction, combined with unprecedented institutional demand, creates a supply scarcity unlike anything we've ever seen. Simple supply and demand economics dictates a massive price surge when supply drops and demand skyrockets. Second, the institutional floodgate, ETF inflows. Tom Lee sees the launch of the US Spot Bitcoin ETFs as the biggest paradigm shift in crypto history. It wasn't just a successful launch, it was the opening of a $1 trillion channel for financial advisors, pension funds, and wealth managers, money that historically couldn't touch crypto. He believes we're only in the first inning of institutional adoption, and when the big compliance departments fully sign off, the inflows will become an unstoppable tsunami. Third, the macro picture, fiat debasement. This is the big, quiet driver. Tom Lee often points to global central bank policies and escalating national debt. In his view, Bitcoin isn't just a risk asset, it's the ultimate inflation hedge and a superior store of value compared to weakening fiat currencies. This macro backdrop provides the fundamental reason why long-term wealth managers are forced to look at hard assets like Bitcoin. These 3 factors, halving scarcity, ETF demand, and macro instability, are his blueprint for 250K. So Tom Lee has laid out the why, but what about the when? This is where most retail investors make their biggest mistake. They panic when things move sideways. Tom Lee's prediction of $250,000 being highly probable next year means he sees the massive price appreciation happening over the next 12 to 18 months, culminating in 2026. This isn't a straight line up. Expect volatility. The key is recognizing that institutional adoption takes time to fully propagate through the system. Now, based on this timeline, what is the action plan? You have to understand that Tom Lee's thesis is not about trading, it's about positioning. Action point number 1, stop panic selling. Institutional players are using these dips and consolidation phases to accumulate their full allocation. If you're selling on a 20% dip, you are effectively selling your Bitcoin to a BlackRock client. Don't be the liquidity for the institutions. Action point number 2, dollar cost average into strength. Tom Lee is not advocating for lump sum investing right now. Instead, he advocates using a disciplined DCA strategy. But here's the twist. DCAing into strength means you trust the market's upward trajectory and you continue to buy consistently regardless of short-term price noise. Action point number 3, watch the ETF inflow metric. Tom Lee emphasizes that the speed of the institutional money dictates the timeline. Track the daily net inflows into the US Spot ETFs. When those daily numbers consistently push into the hundreds of millions, you know the 250K trajectory is fully engaged. Now, it's important to stay balanced. No market prediction is 100% guaranteed, and Tom Lee's $250,000 target has its critics. It's crucial that we look at the counter-arguments too. The primary pushback centers on two main risks: interest rates and regulatory headwinds. The rate risk. Many bear analysts argue that if the Federal Reserve is forced to keep interest rates high for longer than expected due to stubborn inflation, it will negatively impact risk assets like Bitcoin. High rates make holding cash more attractive and increase the borrowing costs for companies, putting downward pressure on high-growth assets. The regulatory risk. While the US approved the spot ETFs, ongoing regulatory scrutiny regarding stablecoins and other aspects of the crypto market could still create major volatility and slow down institutional adoption. A significant crackdown could easily derail the aggressive $250,000 timeline. Final verdict. However, when weighing the institutional demand being unlocked by the ETFs against these macro risks, Tom Lee's thesis holds significant weight. His prediction of $250,000 in 2026 is based on a structural shift, the financialization of Bitcoin, that has only just begun. Bottom line, whether Bitcoin hits $250,000 or $150,000, the trajectory is clear. The time for deliberation is over if you believe, like Tom Lee, that institutions are only just starting to enter the market. Then the time to act is now. If this breakdown of Tom Lee's $250,000 thesis helped solidify your investment strategy, hit the like button right now. And here's the next step. Don't just sit on this information. You need to know exactly which altcoins Tom Lee and other top analysts are quietly accumulating alongside Bitcoin. Watch our next video on the channel, where we reveal the top 5 altcoins ready to outperform Bitcoin in this current cycle. Subscribe to Crypto Market Views 24 for timely, data-driven analysis to stay ahead of the curve. And tell me in the comments, do you agree with Tom Lee? Is $250K the floor or the ceiling? Let's discuss.